Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're recovering today. 10-year note futures coming off the lowest close in almost a month yesterday to trade higher today. And with today's price action, we're negating yesterday's selling. We're back to basically where we started 2 days ago, currently priced at 108.30, just shy of that 109 handle. And when you look at the price action the last couple of months now, we're establishing a range here, coming off the low end of the range yesterday. But really, the range now over the last 2 months, going back to the middle of December, is between 108 and 110. And we're hovering just below that 109 handle in today's price action. Driving factors, really the primary driver appears to be the interpretation of the inflation data the last couple of sessions. Now, yesterday, CPI coming in higher than expected, created the selling pressure. Today, PPI coming in slightly higher than expected on the headline number, the core number in line with expectations. But when the market and market observers and participants had a chance to dig into the data, it appears that some of the things that were influenced these data points that created a little bit higher print are peaking, or the expectations are that they're near their peak and they're going to start to trend lower, and some of that pressure within these select data points are going to create an environment where inflation could top out here and start to trend lower as we move through the year. At least that appears to be one of the primary drivers in today's price action. And with that, we're looking at yields moving lower. The 10-year yield is down 11 basis points today, back to 452 basis points. So we're moving back towards that 450 basis point level that has been kind of the middle point here for the last couple months. And the yield curve is moving lower across the entire curve and a little less steep today. So we're looking at the back end of the curve, yields moving lower relative to the front end of the curve, with the 10s, 20s, and 30s down 11, 12 basis points, and the 2-year down about 6 basis points. So again, there's your area where you're seeing, again, the duration curve. We're seeing those yields not down quite as much on the front end of the curve as the back end of the curve, and therefore a little less steep. But overall, the yield curve has moved lower across the entire curve in today's price action. So 10-year note recovering nicely, back to where it was 2 days ago. And with today's price action, we're back in the middle of the range for the last 2 months.